Welcome back, traders. In today's video, we're going deep into one of the biggest weaknesses I see in developing traders: unclear setups and undefined entry rules. Most traders don't blow up because they pick the wrong stock. They blow up because they enter trades without a clear, predefined setup. They take impulsive entries. They chase moves. They jump in because something looks good. But professional traders don't operate on guesses. They operate on structures. By the end of this video, you'll know exactly what makes a valid setup, how to define your setups in writing, what a high-quality entry signal looks like, and how to build consistency through repeatable execution. So let's get started. A setup is not a pattern, it's a condition. Think of a setup as the environment in which you give yourself permission to trade. A valid setup must have four components. Trend: what direction is the market, the sector, and the stock moving? Level: what key price level is relevant? A support, resistance, VWAP, pre-market high, daily level, etc. Volume: is there participation? Is the stock being traded by more than just retail traders? Confirmation trigger: what tells you? Okay, now it's time to enter. Let's break them down. You never want to enter trades against the dominant trend without a very specific counter-trend strategy. Trend answers: are we long biased or short biased today? Is the broader market supporting the direction? Are we trending above or below VWAP? Are we trading above yesterday's close or below it? Every high probability trade begins from a key level. Levels act like gravity. Price reacts there. This can be a well-tested support, a key daily resistance, a breakout over pre-market high, a pullback to VWAP, a reclaim of a psychological level. Volume tells you whether the move is real. You want confirmation through increasing volume as price approaches your level, high volume breakout candles, a surge of participation on the reclaim. Without volume, breakouts fail, breakdowns stall, and trades turn choppy. This is the final checkmark before entering a trade. It could be a candle close above a level, a retest and hold, a shift in tape speed, a new high of day, a range break. Whatever your trigger is, it must be consistent and objectively measurable. When all four components line up, that's a valid setup. Without them, you're taking random bets. Now let's get practical. I'm going to show you two fully written setup examples. You can model your own trading plan after these. Setup name: VWAP reclaim, long bias, long trend condition. Stock must be trending upward on the day. Ideally, SPY/QQQ are also trending upward. Levels: the stock must break below VWAP early, consolidate, then reclaim VWAP from below. Volume requirement: volume must increase on the reclaim candle. Volume on the reclaim must be at least 20% above the prior consolidation candles. Entry trigger: enter long on a pullback into VWAP after the reclaim, with a higher low forming. Stop loss: below the higher low or below VWAP, depending on risk tolerance. Profit targets: first target, prior high of day; second target, measured move extension; third target, trail a stop once the stock makes a new high of day. Why this setup works: VWAP is the institutional average price. A reclaim with volume shows large buyers stepping in. Setup name: high volume breakdown. Bias: short. Trend condition: stock must be trending down on the day, below VWAP and making lower lows. Levels: identify a strong support level repeatedly tested. Volume requirement: a surge of sell volume as the stock cracks below support. Volume should expand at least 25% over the average 5-minute volume. Entry trigger: enter on the retest of the broken support. Stop loss: above retest candle high. Profit targets: first target, next daily support; second target, 2R or 3R risk multiple; third target, trail stop as price continues making lower lows. Why this setup works: breakdowns with volume confirm sellers taking control and shorts jumping in. Writing your setups like this forces clarity. It eliminates emotional entries. It prevents guesswork. Your trading plan should include everything down to the exact triggers, levels, position sizing rules, and profit-taking logic. The more detailed your setups, the more consistent your results. Most traders confuse setups with entries. A setup is the environment. An entry signal is the ignition. Think of it like driving a car. You can be sitting in your car, engine on, seatbelt ready, but you don't hit the gas until the light turns green. Your setup is everything leading up to that point. Your entry trigger is the green light. Without understanding this difference, you will always enter too early or too late. Examples of entry triggers: candle close above/below a key level, retest and hold, break of the most recent pivot high/low, break of a micro consolidation, shift in time and sales speed, increasing volume confirming direction. Examples of bad entry signals: it looks like it's going up. I feel like it's going to run. Everyone else seems to be buying. Jumping in because you're afraid to miss the move, random dips or breakouts without confirmation. Entry triggers are objective. They are written. They are consistent. They remove emotion from your execution. Here's your assignment, and it's one of the most important exercises in your entire trading career. Assignment: write out 2 long setups you trade. Write out 2 short setups you trade. For each setup, define clearly trend requirements, key levels, volume confirmation, entry trigger, stop-loss placement, profit-taking targets. Put all 4 setups into your trading plan. Use only these setups in your trades for the next 2 weeks. By the end of those 2 weeks, your entries will be clearer, your exits will make more sense, and your trading will feel more controlled and predictable. This is how pros evolve, not by adding more strategies, but by refining and mastering fewer, better setups. Great work today, and in the next video, we're going to take these setups and apply them to real trade management rules, including scaling, stops, and maximizing profits.